Well, g'day there, traders and friends right around the world. It is James here once again on behalf of Pivot Point Trading, bringing you this Monday afternoon market recap. Today, on the Dow Jones Industrial Average, we have formed what we call a shooting star type of candlestick. Now, in its truest form, it is somewhat of a reversal type of signal. However, given that we are still battling with this congested area within this symmetrical triangle, I still remain quite neutral on the overall markets. If we break down just today's price action, however, you can see that obviously we have selling pressure coming in, not only at this horizontal resistance level right here, but also this larger perspective box, which we have failed to break above, not only in the month of March, but for 2 times throughout the month of April also. Until we break above at least this level right here, I'm still very hesitant to be looking at some individual long trades. The S&P 500, a very similar type of candlestick, once again a shooting star right at this resistance level. When you see these upper wicks, just like we've seen in the middle of March and also most recently to late April, we have seen the rollover of the market, albeit a little bit of a short-term rollover. Now, we are waiting for the bigger type of move, the bigger type of breakout, which will eventuate very, very soon. But I mean, just looking at today's daily candlestick, you have to take away that, look, the market is still trying to break above resistance. We're not there yet, and they are essentially showing off or flirting with potential rollovers at these resistance levels. The Nasdaq, the market, really looks as if it's setting up what we call a bear flag. Now, the volume print for the end of the day hasn't come through yet, but this looks awfully similar to a bear flag type of move, just as though we have called this a bull flag breakout to the upside over and over again. These patterns repeat themselves. And right now, if you just look at the candlestick, it's what we call the gravestone doji. So it's even more bearish than the actual shooting star candlestick itself. Had nice little gap up. We tried to fill intraday. We were left with a true body gap, which is interesting. But given, again, the nature of where these markets are trading, the reluctance to push higher, the continued sell signals on these markets, just please sit tight, be selective on your trades and cherry pick the best ones, which we have gone through over that Pivot Point Pro analysis workshop class. If I had to surmise one particular stock today, it would be the IBM trade, which was set up over 2 weeks ago. Today, we actually hit our target. Now, our entry was here at 172.66. I put out a video, it was on Thursday afternoon, referencing this 3-day candlestick pattern right here. Now, this is a very bearish type of signal. We had our stop down here at 169.76, but you can see on Friday we gapped up. We had what we call an inside day harami, and then today we have hit our target at 176.24. So another very nice trade, which is stemmed from that pro analysis workshop class. The interesting part or aspect of this trade at this particular moment in time is that we've really walked through a very, very nice bearish rollover type of trade at this resistance level. Today, when we hit our target at 176.24, we were left with, once again, another shooting star candlestick. Now, you can see that when we get these shooting star candlesticks, when we combine them with these 3-day candlestick reversal patterns, it's just indicating that, look, there is weakness in this particular stock. There's weakness in the overall particular market. And this is, again, another warning signal saying, look, if you're bullish on IBM, or at least in short-term long trades on IBM, be very, very careful. If you didn't get out today, please place your stop below the low of Monday's candlestick and call it a day on this particular stock. We're getting all of the warning signals that this trade is about to roll over. We have some very good entries and targets on that IBM trade, along with a lot of other trades, which we have in that recorded class up on our website at pivotpoint-trading.com. I think that will do us on this Monday afternoon market recap. Again, we're sort of beating our head against the wall, just waiting for this market to break out. I cannot speed this process up. It's just part of being a market technician, and we just need to be patient, remain patient, and the trades will come when these markets break. I'm very neutral, but I am very cautious at these resistance levels, and again, just with the overbought nature of the overall markets and the very low volume which we are seeing on the bullish bounces. It has me, again, a lot, or very suspect at least, on the immediate sort of outlook or the health of the immediate market at this particular moment in time. So have a great Monday afternoon or Monday evening, everyone around the world. I'll be back with you most likely on a Wednesday afternoon, unless the markets give us a definitive break as at or during Tuesday's trading session. All the best. Goodbye.